What's going on, everybody? Welcome to the Stock Market Brief Show. We got a quick one today. Why? Because tomorrow we get ourselves a big binary macro event, and that event here happens to be, ding, 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 core inflation data coming out an hour before the market opens up. But it doesn't stop there. Going into the following day, we get PPI data, some more Fed speak, and then on top of all of that, we have retail sales on Friday. But don't forget on Thursday also, we have Jerome Powell. Holy moly. Now, what is the market pricing in as far as risk goes? That's what we want to discuss. Right here are the expected moves for the SPX, the SPY, the Qs, and the IWM. You got your daily close here. The expected move is right here. Look at this one over here. IWM has a $3.46 expected move. That is a lot higher than what it is usually. You got your upper levels, lower levels, and your two standard deviation moves. Okay, so let's take a look at what these look like today on our screen. So today here is SPY, and you can see if we anchor a volume weighted average price on SPY, this is the election VWAP, and you can see price basically has not came to tag it. Now, our thought process is there was going to come a time where we come back to test that. Well, today we tested it, came into the daily implied move, we started bouncing off of it, and we're currently underneath the week to date anchored volume weighted average price. We'll come back on this chart momentarily with the updated implied moves. But more importantly, just see that we did come into the zone and we started to find ourselves from that. If we take a look at the Qs, same situation. You look at the election VWAP, we came into it and also happened to be right by the daily implied move, and we started to find a little bit of strength from that. IWN, on the other hand, cut right through the implied move through the election VWAP today and found ourselves a little bit of support by the 5-day inclining moving average. It started working its way back up to the implied move based off of the RVX, which is Russell volatility, and it started coming back in within this area, closing below that 5-day moving average. Now, before we hop into the updated charts there, I think it's important to look at the updated trends, and what you'll see here amongst SPY, the Qs, the IWM, the Dow Jones, you got biotech and semiconductors. We do still see a lot of green on the screen. The green on the screen here on SPY, we're above a rising 5-day moving average. Price action has started to flatten out, and we're still holding above that election VWAP. So careful if we start undercutting it and the 5-day moving average starts to flatten out and turn around, that is going to be an early warning sign to just be more cautious. Semiconductors, right? We got under it and it's still yellow. What does yellow mean? It means that the calculation of the 5-day moving average is still moving up. However, price is currently below it. So right now, it's more of a cautionary time to be in semiconductors. You can see the election VWAP right over here, and we're below that as it stands. So more importantly, what you'd want to see is price to get back above it and for that 5-day moving average to continue its trend. You got biotech over here. This is now turning red. Why? Well, because we're starting to significantly kind of push down through these levels, and we're below that 5-day moving average. But it is rather flat, and it's starting to decline. A very strong move like this, I would not look into shorting, but if you're interested in shorting biotech, you'd want to see a series of lower highs and then the lows breaking down to create a new lower low. Overall, on the daily time frame, biotech doesn't look all too shabby. Right now, it's in a larger structure, but I don't got that chart in front of me. IWM, rather flat, and we're trading right at around that election volume weighted average price. And you can see the trend changer over here is starting to turn yellow. Same with the DIA. We just barely closed beneath it. We're basically on it, and we're on that presidential anchor volume weighted average price. So a lot of inclining 5-day moving averages here. I think we're in an area where we need to be a little bit cautious. And, that makes a lot of sense because price action, we did pull into 6,000, this big gamma level, and we're well aware that 6,020 is that JPM collar. So it's going to be hard. While I'm seeing 6,020, I'm also seeing 6,050. So in and around this 6,050 range, it might be hard for the market to really press through that, given the context of how gamma exposure is currently set up. How we have an OPEX at the end of this week, and that the JPM collar is there. I will note that traders are currently reaching out higher and further, 6,100 and 6,050, which is not necessarily a bearish sign in this current moment. If we take a look over at the gamma levels placed on the chart, what you'll notice here is the gamma flip lines roughly at about 58.80. Anytime we're above that, you look to buy the dip and then sell the rip. This is where typically volatility comes in. We went on a monster run, and to see some digestion in and around 6,000 is more than expected. So just be aware when you get above it, and 6,000, if it does tend to be the main call wall, right? There's still a lot of gamma exposure here. It may see itself coming back in like it did and kind of trading in around this level. Come Friday, we'll have a big option expiration, so we'll see where traders are reaching out to after that. If the market wants to continue to sell off here, even if it were to come down back to 5,900, that'll just be into an area where we saw prior resistance, and prior resistance can become potential support. Alrighty, so now let's look into the updated expected moves for the day. We'll take a look at SPY first. Take a look at SPY here. You can see we are trading currently right in and around that upper monthly expected move. So go figure. We came into the upper monthly expected move very quickly. It's only November 12th, and we've been just doodling in and around that level. Well, like I said, we're below the week to date, above the presidential election VWAP, and we're trading also kind of pinching between those levels with a very steep inclining 5-day moving average. We have not tested the weekly expected move yet, and there's always the high probability that we do tag these. In fact, it's about 75% likelihood that we tag those. So we haven't got there yet, and we're really basically unchanged to slightly down on the week. So keep an open mind to see some volatility still pick up to grab one of these moves. Now, from a daily perspective, we can see ourselves down here at about 593 to 591 is the implied move for VIX, and or above, which we can see some overhead resistance intraday. So if we do get back above this kind of sloping down trend line over here, say if we come back up and break above it, this would be a potential target for intraday. Obviously, if you do trade intraday, it does help if you look at market net flow. So you'd want to see a bullish divergence there in market net flow. Basically, what this is telling us is we have the cumulative net premiums of calls, cumulative net premiums of puts, and you want to see price action of the SPY moving with it. This white line right here is the price of SPY, and when it starts to move with it, it should be lit up more green here. So that'd be something that I'd be watching intraday perspective. And if you are in the Discord, you can use the query channel to get this specific chart. It doesn't show you convergence, but it does show you momentum. And momentum, in my opinion, is just as important. Momentum will really just tell you the differential that we'll see between these cumulative net premiums of calls and puts. Okay. So that's SPY. Let's take a look at the Qs. Take a look at the Qs. Bing bong. Here we go. We're trading right at around the upper monthly expected move. We got outside of it, and we're just doodling around in its happy place that was priced in for the month. Still above the presidential VWAP, which is a positive sign. If we start getting back below it, just be more cautious that we come into the lower daily implied zone, which is 508.80 down to 507.06, and we have that weekly expected move down here at 505.30, and we have our upper at 522.94. Overall, this is just a bullish consolidation and somewhat of a pin in the markets currently. We'll take a look at IWM. Now, IWM's implied move, daily implied move, is rather large, and it's almost the size of its implied move based off of the Russell volatility. So if we start to see a snapback in the Russell, start watching up here at about 240, 241-ish, but I'd be watching that upper week-to-date anchored volume weighted average price. It's currently declining here, and that could act as a potential level of resistance. So seeing a lot of volatility in Russell, just be careful out there. Put these levels on your screen if you choose to do so. Overall, we do have some earnings still remaining coming into the week. Before the open, we got Hut 8, we got Cyber, and then after the close, we got Cisco. Before the open on Thursday, we got Disney, and then I know a lot of people are waiting for before the open on Baba, because some of these Chinese names, Chinese equities, they've been getting beat up here in recent trade. Let's go over a couple of names on the radar. I did make a very extensive video. I'm going to go over just a couple of these names that I went through yesterday. I'm going to start off with PENN. This is Penn Entertainment. I just wanted to call out that the 20-day is starting to slope up, the 50-day, and it's getting back above the 200-day, which is not there yet, but we are kind of breaking out of somewhat of a base today. So I'm not looking to get into it right this exact moment, but I would like to see how it consolidates after this recent run-up and see if we got some legs to a potential base breakout to and around 25 or even potentially higher. So I like Penn, how it's setting up. I like Starbucks too. Starbucks saw a breakout the other day, and today we had an inside trading day. So I'm patiently waiting here, seeing how this sets up too, and if we can get a continuation. If it starts breaking down, well, then you know what to do. Just get out and see if it resets up. It's really that simple. And then we have HPQ. Now, HPQ has earnings around the corner here, so I proceed with caution of new positions, but I do want to call out that it's been building this base pretty much for about 5 to 6 months over here. We had a big earnings move, and we really have just been floating within this earnings candle since that day. And recent trade, we start to see higher lows being built, and we're kind of pumping around this pivot level. So what I'd like to see is price to potentially break out here in the near future. If I want, to be very patient here, because earnings, like I said, it's not too far around the corner, 11:26. So we got some time left. But if you don't initiate a trade, what I'd like to see on earnings is just a nice big bullish move. And then I would be waiting for the consolidations and potentially playing follow through like such. So those are the couple of the names of the many that I'm looking at. If you haven't watched the Trade Ideas video, or if you're not part of the Discord, you can come check it out. It's only $9 a month, or you can even do it for less than that if you just pay for the year up front. And you can watch the prior videos, see various trade ideas. It's not an alert service, so don't come in here thinking that. You get access to the community, you get monthly expected moves, daily expected moves, the zones document, and just a bunch of other goodies. That's all I got for you. Hope it helps out. See you later.